Hello and happy Friday, everybody. It's that time of the week. It's the time for the Security Token Show. You know what that means. We've got your weekly digest of all things real world assets and tokenization. We're your hosts. I'm Herwig, joined by Kyle, of course, every week. We're glad to be here. And man, what a week, Kyle. What a show we have. We got great interviews. We got the acquisition by Hashnote from Circle. So we got the CEO, Leo Mizuhara, who's now, actually their VP of product over at Circle now. So we got a great interview there, as well as with IronWeave and Castle Placement, and some amazing historic news, right, Kyle?
Yeah, no, it's so good to be here, Herwig. Obviously, optimism in the crypto space at an all-time high, with the previous administration leaving the White House and a new one coming in that certainly, at the very least, is going to be what seems to be much less litigious and much less aggressive at enforcing restrictions on the crypto industry. And Herwig, it's not only been domestically in the US. I've watched a lot of the conversations at the World Economic Forum in Europe. It also seems that even around the world, much of the rhetoric is optimistic about what is in store for the future. So I think that vibes are really good. I can't wait to dive into this week's episode.
Oh, me neither. And hopefully everyone else is too. So if you're watching and you like the show and you haven't hit that like button or the subscribe button, please help us out. And it even helps more if you leave a comment, give us your feedback, or even better yet, share it with somebody who you think would like the show. So with that, we've got a great interview, and then we got Nico Pantelis waiting on the line. So let's get right into it.
Welcome back, everyone, to a Security Token Show interview with a very special guest, Leo Mizuhara. We have a very important announcement here, which is that Circle has acquired Hashnote, hence why you might see a different title on Leo there. Leo, how are you?
I'm well. It's good to be back. It's good to see you again, Jason.
Likewise. Thanks for coming on. Well, you are now VP of Product at Circle, but right before doing that, you led Hashnote to over $1 billion worth of AUM in your USYC product. What unique features or innovations does USYC bring to the table that set it apart from other tokenized liquidity products in the market that you feel, really led to Circle acquiring Hashnote over other issuers?
Yeah, I think there are a number of features that made us appealing to Circle and appealing to our users at large as well. We really built USYC as a collateral token first, right? We are a yield-bearing collateral token, which is somewhat different from what some of our competitors might have as just tokenized money market funds. We emphasize the ability to redeem T0 into fiat and instantaneously into USDC. And there are obvious synergies between what we're doing there in our instant redemption and what we could do as part of Circle to make that even more powerful. And I think those usability features, the fact that we are such a nimble and easy to use collateral token, is what allowed us to grow to the size that we did.
Yeah, that makes sense to me. I think utility is really the key term here, right? We're adding, anyone can tokenize any asset, but really adding the next layer in terms of interoperability and whatnot. I think that's something that you guys have done very well. Hence, to your point, the growth of USYC that we've seen. With that in mind, stable coins and liquidity products like USYC have grown rapidly in the tokenization space, especially throughout 2024. What do you see as the biggest challenges in further scaling, tokenized money market funds globally and the like? Especially in regions with varying regulatory frameworks?
Yeah, the regulatory frameworks is another reason why I think we were a good fit for Circle. We were also very regulatory first, and I think Circle is also a firm that has always prioritized being a regulatory first company. We are going to continue to be careful about where we can issue, and we are going to be committed to complying with the evolving regulations around both USYC and the broader set of products that Circle offers. That said, I think there is a lot of potential growth in this space. I think the new administration in the US in particular is going to be very very conducive to growth in this space and for adoption from what we currently consider TradFi. I've always thought that this bifurcation between TradFi and crypto or DeFi is a false bifurcation. Generally, finance has been very good at picking up new technologies and growing them if they have an advantage. And I think blockchain technology and crypto products have a significant advantage to some of the traditional products. And so we should expect these to grow very rapidly as soon as some of these headwinds are taken away.
Yeah, really excited on our end too, especially the more that, tokenized liquidity products really back the treasuries for Web3 organizations, for stable coins. It kind of all grows together there. Everyone wants yield here. Excited to see that, there's obviously the fit between you guys and Circle here. Now with USYC being a yield bearing collateral option on Canton Network, by the way, based on the press release there, and USDC will also be issuing natively on Canton, and Cumberland will also be involved, which is fantastic. I think Hashnote kind of stems from Cumberland Labs. But what innovations and second order effects do you think will it be experiencing in collateral management, and that will emerge in both crypto markets as well as TradFi markets?
Yeah, so as I mentioned earlier, we really did build USYC to be a collateral product. And so the main reason why this is so much better than the TradFi equivalent is really the speed at which we can move this around. So currently, I used to run systematic options at DRW, and when we were there, moving collateral from CME to Eurex was a T+3 operation. That's crazy to me that moving cash is a 3-day operation. And there are various reasons for that, but with the new blockchain technologies, we can now do this in 14 seconds or less, depending on what blockchain you're on. And I think that's a game changer for trading firms that want to stay nimble. Being able to do that with yield-bearing collateral is even better, as these trading firms always want to be collateral efficient and or capital efficient, and that's one of the primary constraints they have. One of the downsides to this technology is actually the transparency, which is funny to say, because when we think about blockchain technology, what we usually say is, oh, it's transparent, that's so much better. However, as a trading firm, that can be really detrimental, right? If I have collateral posted against my Bitcoin position, for example, and every time Bitcoin goes up, I'm like posting more collateral, and every time it goes down, I'm withdrawing my collateral, it tells you what my position is. And everyone can watch those positions and watch that collateral to infer what everybody else's position is. And what that actually does is it actually makes markets less efficient. It makes it so that people start to amplify that volatility. They start to trade against your position to amplify your losses or reduce your gains. And that actually hinders price discovery in a way that is not healthy for markets. So we think the innovations on the Canton network are super important, because the Canton network allows us to have all the benefits of blockchain technology, including the speed and this ability to have secure transactions, trustless transactions, but at the same time, maintaining that privacy. And that is incredibly important, as we've said, for these collateral type use cases. But it's also going to be important for many other financial use cases. You don't necessarily want to see or want others to see every single one of the payments you've made. That there's a level of privacy around payments that people like to keep. There are regulations around certain types of transactions not being public. Things in the mortgage market and things in the healthcare market come to mind. And so use cases like that, I think, are also perfect fits for the Canton network. And I think these are the reasons why both we have supported, as Hashnote, we supported the Canton network and deployed USYC already, and why Circle and USDC are looking to issue here and bolster the use cases on this network.
Got it. That makes so much sense. And even at Tokenize this 2024, someone had mentioned too, information asymmetry is really what drives markets here. So to your point, obviously there is a privacy factor, not just from protecting your own trades here, but also just the health of the market, which is really interesting, and why Canton, is such an interesting, addition for the Circle family here. Shifting gears, you've, as we kind of mentioned at the beginning of the interview here, you have a new position within the Circle ecosystem. So I am curious to see, what lessons from founding and scaling Hashnote will you carry forward in this new chapter with Circle, and how might your leadership approach evolve in this larger ecosystem?
Yeah, I did found Hashnote coming out of DRW, but I've spent a lot of time at larger institutions, actually. I was at Bank of America for 12 years. I was at DRW for 5 years. I think my experience will be very helpful for Circle. And to a large extent, I have experience in maneuvering around these larger institutions and working with larger groups of people to move an idea forward. So I'm very much just planning on tapping into some of the experience I've had in these large organizations to move the needle at Circle. I've always been a first principles thinker, and I think that shows in our approach with the USYC money market token in terms of building something first, thinking about what is the utility and how are we going to drive value in the market as opposed to following whatever might be the hype at the time. And so we will continue to do that at Circle and hopefully be able to build with the scale that Circle has and the leverage that they have, more important products for the financial markets and deeper integrations as we make the future of finance really be all on chain.
Yeah, no, those are all great points. You have both experiences, it sounds like, which is fantastic to be able to drive this forward. And, with Circles, kind of reach in the market as well as just the broader ecosystem around the world. I think for all the reasons we've covered today, it makes sense now, why USYC, was that kind of the chosen one here. Which now I do want to, look forward now, things are changing fast. So we have an insane, crazy week of news, which, our viewers will also see on the show. But the RWA market cap is currently around $50 billion, excluding stablecoins, around $260 billion, including them. Where do you predict will end 2025?
Look, it's really hard to know where exactly we're going to end up over the course of the year, especially in a year as volatile as this with the new administration. It's going to be a lot going on. So I very much expect these markets to evolve. I think the adoption from traditional institutions is going to be enormous as the regulatory clarity opens up. And I think Circle is really in the pole position to be able to take advantage of these changes. I'm really excited to see where stablecoins are going to go throughout the ecosystem as that adoption picks up. I'm really excited to see these collateral use cases for USYC pick up. I think there's a lot of indications that the regulatory frameworks are already thinking about these types of use cases, and for certain, the institutions have already been thinking about it. If you think about the biggest trading firms within the crypto ecosystem, they are actually the big trading firms in traditional ecosystems. So, my alma mater, DRW, is one of the biggest trading firms on all the exchanges in the U.S. The other players you see, like Jump, Susquehanna, Jane Street, they're all big traditional institutions who already see the benefits of blockchain technology. And I think they're going to be pushing hard to take products like ours that have worked well for them in this space and move it into traditional space as well. So I think that what we've seen so far is going to get dwarfed by what we're going to see over the upcoming years.
That is just so exciting for this space, Leo. I'm glad that you brought that up. And to your point, that traditional finance is finally starting to really understand this and dive right in, right? So the growth from that alone is and that adoption is going to be something to really keep an eye out for. Awesome. Well, Leo, thank you so much for joining us today. Before I let you go, any way that people should stay in touch with you or Circle, and obviously people I think will want to keep an eye out.
I actually don't yet know what the ways to contact Circle are, so I need to defer to them. I think Circle has a number of ways to get in touch with them, so I would kind of refer to their website and their social media. In general, I've very much been focused on what we've done with Hashnote and USYC. We're happy to have been able to grow to the point that we have and join Circle in this way. We're excited with all the growth we've had globally. I think we've been careful not to offer this to U.S. investors and customers, and are excited about the changes that are going to come as we start to offer it out of Bermuda and out of Circle. So, yeah.
Fantastic. Well, everyone, keep an eye out for Circle. Make sure you follow them on socials, as well as Leo and the team on, socials as well. And, obviously keep an eye out on their website for future announcements. But with that, Leo, thank you once again for joining us. We'll be shifting over to the next session of the show.
And now it's time we get to break into the biggest moves this week. What happened in the space that we just felt was the most compelling thing to talk about? That's why we call it the market movements. And we've got our guest contributor back again at it, Nico Pantelis, partner at Blue Bay Ventures, one of the leading RWA VC firms. We talked about actually how they invested in Bricken last week, and they're also an investor in us. So happy to have you, Nico. How you doing?
Gentlemen, how are you doing? What's cooking? By the way, I saw my shout out to the RWA Foundation, got some traction online. People signed up to the X account and also signed up to the Telegram group, which is very important because I heard you guys are cooking some nice stuff up behind the curtain. So I would recommend, and this is, of course, not financial advice in any such way, to start hooking up with the Telegram group because some goodies are coming, I heard.
Oh, yeah. 300 members now. So the herd
300 already. This is going quickly.
Yeah, we are growing, and it's all organic. We hate bots. So
word on the blockchain.
What are you guys going to do when the counter hits 1,000? What was the problem?
We're much more of a reward and surprise type of culture than we are how to qualify. So, make sure you
sign up, everybody. Sign up.
Yeah, tap in. But we did release our roadmap, Nico, recently. And what I'm maybe most excited for, besides the TG and all of our amazing partners and perks and plans, is WALLYCon in Miami at the end of the year. That's going to be a good time. So they're ready for it.
Let's go.
What a week of news. We also got tokenized this in April, but we got even more happening right now. We just saw the interview, guys, with Leo about the acquisition from Circle of Hashnote. And we saw USYC become the dominant number one by size, liquidity product, as we call them. In the space very quickly, almost seemingly overnight through sort of November, December. And now they got acquired just like that. So what are your thoughts on this? Obviously, the big takeaway was, their collateral seems to be the big theme here, but would love to see how you guys are interpreting this move.
For me, it's an extension of what I said a few weeks ago already, that the business model of Tether is already dead. This is not going to last forever. This juicy margin that these guys are getting the rewards on the back end, it's just not going to happen. And Circle has the same problem. Of course, there's a problem in the future somewhere, and they need to be upfront for this problem, and that's why they start buying these products or these companies like Hashnote. It's very important to get different products out. I think also Tether was set up through the Bitfinex exchange way back in the early days. And I think Bitfinex also has Bitfinex securities, I think. So you can see that there's product building going on in the back end, and that we as investors can profit from this juicy reward margin in the back end probably already this year with new products coming online. So I'm very excited about this because it brings the securitization, future that Larry Fink is preaching nowadays up front, to us. That's a very important thing.
I agree with that. I think it's from Circle's perspective, it's better late than never. Herwig, I feel like we've been talking about generating yield via stable coins and staked assets for many years now. Rehypothecation was a really hot topic and hot button issue in the previous cycle, where a lot of these companies were trying to provide yield to crypto holders. And from at least my perspective, they seem to be trying to do it in roundabout ways. buying treasuries makes a ton of sense. And so I'm really excited to see that this is a product that continues to grow and drive adoption that seems much more sustainable than the lending style of strategies that have been employed in the past. So I think that it all makes sense. But I can't help but think like, man, had they just kind of done these types of things like, 3-4 years ago in the previous cycle, we may have saved a lot of headache and heartache. But what do we know? We've been doing it for 6 straight years talking about it,
Well, 4 years ago, the beginning of COVID, 2020, market cap stablecoins was $5 billion. So we've come a long way in seeing some adoption, which is great to see. I think the highlight was when Jason and Leo really dove into, it's the utility, right? This is now a very competitive landscape. Your ability to roll out utility and integrations into benefits, like that's what's going to attract your customer. In this case, it worked out really well for USYC, right? Focusing on collateral first, because that's the use case that works for them. So exciting to see, but I think almost as exciting, but not nearly as exciting, of course, what we saw this week, whether you call it a late Christmas or an very early Christmas, Kyle. Wow. Nico's watching from over in Dubai, but we're having a party over here in the United States, aren't we?
That's right. There has been a ton of new developments ever since, the Trump administration has officially taken office and has begun making executive orders. The executive order thing is slightly unclear to me, like what they can and can't do, because it seems like, they just kind of can launch a bunch of blanket policies. But I'm certainly not complaining in this respect, because we saw a whole host of developments that I think are decidedly pro-technology, pro-crypto inside of the US, just honestly by starting by dismantling a lot of the prohibition that has existed in the US financial system over the last few years that have ramped up. So first off, the acting SEC chairman, Mark Uyeda, who is on the commission, and I think he's in that kind of interim position while either he or someone else is nominated and confirmed as the official commissioner. But for now, he is making those decisions. They launched a crypto task force within the SEC, and that is spearheaded by Hester Peirce. We know Hester Peirce as crypto mom. She's been super aggressive in supporting sandboxes, which Herwig, you and I are certainly huge fans of and would love to see in the US, as well as many other very DeFi focused initiatives she's in big favor of, and now gets the opportunity to lead this task force. So I think that in and of itself shows that if she's the leader of the task force, there's going to be a lot of opportunity for innovation in a sustainable way. Not only that, but Washington, D.C. also announced that Senator Cynthia Lummis, who is super pro Bitcoin strategic reserve and many other things with respect to blockchain, is actually going to be chairing the panel on digital assets. So they launched a Senate panel that's specifically focused on these types of technologies and how it translates into the American economy. It's called the Senate Banking Subcommittee on Digital Assets. And their focus areas are on bipartisan support for digital asset legislation, which, by the way, anyone who doesn't know, crypto was the single largest block of donations of any political interest group in the 2024 election by a significant margin. I don't think you're ever going to see a US-based election where both candidates are not working towards receiving donations from the crypto industry. The Democrats absolutely have learned their lesson here, and I think it's great to see a bipartisan effort in driving the adoption here. And they're trying to create a situation to allow regulators to learn, understand what's going on here. Not to mention Trump signed some executive orders, which we can dive into, and the SEC repealed SAB 121, which was a accounting guidelines that made it really difficult for banks to hold digital assets on their balance sheet, and amongst a few other things, aka just complicating the process for banks. Not to mention we saw a lot of the Operation Choke Point 2.0 stuff be revealed and much more transparently. So guys, there have been a ton of rollout in the political sector in the US. What are your thoughts on what's going on?
I want to congratulate America and all Americans that this thing is going through. It's an enormous thing for the whole world at large. So very, very good what you guys have been doing there. And I guess it's It's because it's about technology, and it's about that America is the technology leader of the world, and it should stay like that. And crypto is technology, and that's very important. And that's what the world is opening up to now. This is not some scam or something for villains or any of this thing. No, this is a technology revolution again. And America is going to embrace it. So it's stopping the choking of the industry in the US. It's starting to get clear rules in the system that everybody knows what is a commodity in token and digital assets, what is a security in digital assets, what is a collectible in digital assets. It's very important to know these distinctions. And David Sachs also made a special note for stablecoins and this executive order, which will be handled as a separate category, in my opinion, as a currency, a global currency, because this is the way that the US will conquer the world with digital dollars, let's say it like that, and not through a CBDC system, which Trump is completely opposed to. And this is very important because I heard already rumblings in the European Union, because these guys, they're very fond of their CBDC structures and what they're making, and this will completely torpedoize the system, because the US can rule the digital market in that sense if they push out these USD stable coins globally with a good structure and regulatory frame behind. And last but not least, the US is going to study a strategic stockpile of cryptocurrencies, not only Bitcoin, which is very important, but crypto at large. Very important, grabbing the whole segment and not only focusing on a Bitcoin reserve, but making it broader is very important for the industry. That things can move forward. So again, congrats to everybody over there.
That's big league. That's a great analysis. Great analysis, Nico. I couldn't have said it better myself. I'm just excited to see all of these things actually happen, right? There's a lot of people who say it could be all talk, could be promises, but we're talking about within the very first week, it did come to fruition. A little bit of a rocky start. Some might argue with the Trump and Melania coins coming to market right before all of this, but made good, I think, by a lot of these actions. Specifically excited to see the right people in charge and oversight for the SEC when it comes to crypto markets and tokenization. I think that's a big deal, having the right people, understanding this market. Obviously, SAB 121 was probably single-handedly one of the biggest setbacks for the crypto industry in the United States. So that finally being, repealed, go SAB 122, because I think that is crazy to me, actually, that, Gary Gensler essentially under his, regime decided that, hey, let's block out all the banks from participating into crypto. The very regulated infrastructure, the very, thing that's providing oversight and protection to everybody, and said, no, let's go give it to Coinbase, basically.
Again, what were these guys thinking? It's such a crazy...
Absolutely, it's crazy. It doesn't make any sense. But, of course, now the banks can play, and we're going to see them get, I think, very active in this space. And it's going to make things very interesting. It's going to dial things up, as they say. And so I think that's already monstrous. Without a doubt, of course, I am also putting some faith, obviously, in David Sachs, the crypto czar, and hoping that they come up with the right definitions for the U.S., and the stablecoin framework and all that. It's got all the right good intentions. Now they're delivering on their promises, but the execution is going to be key here. And it seems, again, like all the right people are in place to make sure that the U.S. really does become the crypto capital of the world, without a doubt, which is great news for Miami. because it already is kind of the crypto capital of the world. So, love to see this government backing, if you will, and the fact that there is no more choke point, hopefully no more debanking, that we're going to see banks, kind of specific ones, probably embrace, the crypto industry. Again, we're in a whole new era. And I think, sure, we're still going to get meme coins, as you can see, per Trump, and we're going to always see the very variety of different capabilities that blockchain brings to the table as a whole. And you're always going to get your Bitcoin maxis being very vocal. But overall, this to me marks the new shift towards the RWA future, putting the world's financial economy on chain. This is, sure, you're going to get a lot of that sort of childish stuff, if you will, compared to Wall Street type activities. But, now it's happening. The banks are embracing it. It's coming. And crypto natives are going to embrace it too. I think we're going to run circles around the banks, honestly, when it comes to the innovation around RWAs. So I'm excited just to see this new playing field come into fruition.
Absolutely right. Absolutely right. What else do you have on deck, Herwig?
Well, our favorite new poster child for the industry, Kyle, is at it again. So Larry Fink has now got on the news, not last year at the beginning of the year, he started talking about tokenization. Now at the beginning of this year, he was doing it. And now over in Davos, as well as again in some other segments, he is really, again, beating the drum of tokenization, right?
Preach, Larry, preach.
Keep going, man. Keep going. You're doing it better than we ever could. But his clips, his sound bites are being heard. This latest one, him literally urging the SEC to hurry up and approve tokenized bonds and stocks, which to many people, is a foreign concept. The idea of even tokenized stocks being one of the first use cases is out there, a little bit out there. Obviously, bonds, we know that one of the BlackRock ETFs bought the Quincy bond that JPM tokenized, but it was just an interesting choice of words, and just also ending that quote with democratizing finance, right? So he's hitting up all the keywords here. He's making it very easy to understand. But I think we all know that it's all going to benefit BlackRock greatly as well. So I'm glad to see the incentives are aligned, but people do need to listen, and people do when Larry Fink talks, right, guys?
First mover advantage is very important in the technology space, and Larry Fink probably knows that very well with all his investments that he has done with his companies. But the guy's preaching, and this is why we set up Blue Bay Ventures, to fund this complete new financial industry. This is the vision we and you guys had already. What is it? 9 years ago? What is it? 10 years or maybe 9 years? It's crazy. It's so good, and it's so fantastic to see that these captains of industry now see the light that we saw many years ago, and that this is what the financial industry is. They just don't know it yet, but this is the new financial system that we're talking about. Digital tokens in the form, of debt, bonds, equity, stocks, commodities, everything under the sun can be tokenized, and that's what's going to happen. And instant settlement, guys, this is such an important thing. If you see how capital formation went with the Trump coin over the weekend, raising up to $15 billion in a weekend instantly, it's enormous. That's never going to happen with the current system. So everybody's eyes went like this. Wow, what the hell is this? Where did all this money come from?
If I had a bottle of champagne, I'd be popping it right now, Nico. That's well said.
It's fantastic. It's just amazing to see.
And I think it's interesting, after what you mentioned earlier from the Hashnote CEO with their Biddle fund, how they're launching additional features like the daily dividends, like some of these things. Or we've talked about shareholder benefits and providing a lot of these types of additional value to individuals that own shares before. and how that's a huge opportunity for tokenization. Now that you can locate exact shareholders and you can gamify the experience and you can provide for them in ways that weren't really available to you before. Daily dividends is a good example, and that's on the financial side. We've seen lots of examples in the security token space in the past about loyalty and memberships and all kinds of interesting things that can come with this as well. I do think this is really cool, and I love that BlackRock is doing this stuff. They're paving the way. One of the biggest companies in the world, most liquid companies in the world, most political power possible, and they're actually walking the walk in a way that we're not seeing from really anyone else in kind of paving that new pathway, trailblazing on some of these things, using permissionless blockchains, building on Ethereum, now launching additional features and stuff. I just think it's really, really interesting. Whoever they have in their team that's leading a lot of this stuff really gets it and has a lot of political pull. Whereas in a lot of these firms, we see like the labs teams, they don't actually, have as much ability to really directly impact the company. It seems like that's not the case within BlackRock.
The missing link was the political side in the US. That was the real missing link, because this combination of TradFi / Larry Fink with the administration in the US begets to liquidity at large globally. This is such an important evolution. I think our industry will look completely different within 18 to 24 months. It's a complete. Nobody has a clue what is going to happen, but this will be an enormous thing.
No one's more bullish than me, Nico. You better believe it. It's all happening, and it's happening now. I love the settlement by Biddle. Kyle, you're absolutely right. Just like we saw with Hashnote using collateral, right, as their focus, right? It's all about utility. And I think in the early days when we were first starting out, everybody thought, I tokenized it, I'm done. Right, I've got the product. Everyone can buy it, trade it, do whatever. I'm done. But no, the reality is that's step one. That's actually the easy part. People are going to realize tokenizing assets and securities is actually fairly easy outside the legal of that comes with any traditional deal. Right, that doesn't go away no matter what. Right, so it's going to be very, very easy to tokenize. The key is adding utility, infrastructure, so that you can use the tokens and actually, take advantage of either collateral or daily dividends or other use cases like instant settlement, like you mentioned earlier, Nico. I'm excited for this future. What a great market movement, guys, because, I've got goosebumps. I'm ready for this year. I'm so ready. And it's all coming together. Perfect timing, I think.
Absolutely.
Well, guys, we've got more of the show to cover because that's just a glimpse, the biggest glimpse of what's happening in the space right now. But there is more, so stick around. We've got another great interview now with IronWeave and Castle Placement, so stick around for that and the rest of the industry news to follow. So let's keep on going with the show. Thanks for joining us, Nico.
Welcome back, everyone, to Security Token Show interviews. This week, we have both David and Richard joining us from both IronWave and Castle Placement, respectively. Gentlemen, how are you today?
Great. Thanks for having us here.
Absolutely.
Thank you.
My pleasure. Thanks for coming on. You guys have interesting news coming out that you guys are raising, or specifically David at IronWave, you're raising $15 million for essentially what my understanding is a blockchain-based operating system here. So tell us a little bit more about what you're working on here, and then we'll get into the offering and so forth.
Sure. So IronWeave is a new and novel approach to blockchain. Instead of a single chain, there's an unlimited number of interacting chains, and every time there's an interaction, whether it's a payment, a token, or any other sort of data, a secure, private, individual block is created and placed just on those interacting chains. So this flexibility and scalability enables all sorts of things that just weren't possible and still aren't possible with other chains. And it really unlocks tokenization of real-world assets in ways that just haven't been able to be done before.
Got it. And when you say ways that haven't been done, I mean, we've seen multiple real world assets being tokenized on multiple chains, private and or public. What are some of those things that haven't been done that you're kind of referring to here?
So in IronWeave, there's no set block size. So you can have a little IoT update, or you can have an MRI on-chain data. And because of the nature of IronWeave and the fact that every block is encrypted, and there's an unlimited number of chains that can interact, those blocks that are created are only accessible by the participants. So it's a level of security and privacy and a data unit for an online world that just hasn't been available till now.
Got it. Sounds like this could be also just applied to other things that's outside of real world assets too.
Absolutely.
What would be maybe some of those other, non real world asset, applications as well that you kind of have in mind?
Sure. Well, the payment industry is ripe for all sorts of kind of disruption and upheaval. So that's one area, but healthcare records is another. One of the unique aspects of IronWeave that also makes it different from other online data sources is because each interaction is in its own encrypted block, and it's owned by the individuals who are participating in that block. It's resilient against ransomware. So anybody who has data and has an environment where their database or their data store has been hacked, in IronWeave we prevent that because each data unit is its own individual unit.
Got it.
Healthcare, financial services, insurance, and asset trading.
Very, very interesting stuff. And, blockchain again is a technology at the end of the day that can be applied and repurposed for different, areas and whatnot. So it's interesting to see what you're building here. I do want to get back to the point that this is a capital raise at the end of the day, and you're doing it through castle placement here. Richard, tell us a little bit more about, the offering itself, whatever you can share, and to what extent this is, a tokenized offering versus traditional.
Sure. Just for background, Castle Placement is an SEC registered FINRA licensed investment bank. We've been in business for 16 years, and we just raised private capital for our clients. So we raised multiple billions of dollars for our clients. And this capital raise is being done as a traditional Reg D 506C capital raise. However, the investors will have the option to convert to tokens when the token event occurs. And the tokens themselves will be corporate currency, which is a Castle Placement branded structure, and allows the holder of the token to not only have an ownership interest in the platform, but also affinity benefits in connection with the platform. And we think that that's extremely powerful.
Mm-hmm. There's two things there that I want to touch on. Absolutely. First and foremost, maybe touch on the logic between, rather than starting, from the get-go as a security token offering at the end of the day, right? Why are you taking it as the approach being, a traditional raise and then convert?
Sure. There are uncertainties in the marketplace right now from a legal regulatory compliance perspective. So we thought it was most appropriate to do this under Reg D 506C, which limits it only to accredited investors. And then when the token event occurs, it will be opened up to the general public.
Got it. So a little bit less siloing off of, preference, and, kind of just give the choice down the line, it sounds like. The other part to corporate currency you mentioned was affinity, right? And perks of those types. Tell us a little bit more about what you're seeing in the market and what you mean by that in terms of this offering.
Sure. Well, it depends on the issuer, because affinity benefits would be very different for a music concert company versus a blockchain technology company. But for IronWeave, David, why don't you go through some of the affinity benefits that we're offering?
Sure. So one example is of an affinity benefit is a discount on the fees associated with the activities on IronWeave. So for example, if you have certain amount of tokens, you may get a discount. You will get a discount on the fees associated with the platform. Another example is priority access to running nodes, for example. So there's logic within the IronWeave architecture that points activity toward nodes that are of the highest performance and lowest cost. So if you are a corporate currency holder of IronWeave tokens, then you're going to have priority in terms of the nodes and the traffic based on that. There are other governance structures that will enable you to also have kind of a priority say. And in the end, this corporate currency now allows investors and owners to have benefits that otherwise you wouldn't get, whether it's a standard kind of stock issue or other sorts of blockchain things. Other blockchains may have yield sorts of things, but we're going to go a step beyond that and take tokenization and the corporate currency concept that Richard has created and take it a step beyond.
Yeah, no, this is intriguing, and this is also, part of the benefit of blockchain in general, right? It's knowing exactly who holds what and be able to assign those benefits immediately on an individual basis. I think. Are you guys getting feedback here?
Yes,
we're good. I'm good.
Okay. Awesome. Yeah, I think one of the cases that we often reference here is, the AMC trying to give out popcorn to their investors, but it's like, how do you verify who your investors are, especially if they're the holders are in street name, right? So blockchain, to your point here on the affinity part, obviously lets you know exactly to the other point of, who gets those benefits and then what amounts. So glad to see you're practicing.
I don't know if we've gone through David's background, but his team has built infrastructure that allows a lot of flexibility in terms of what the token holder can do. David, maybe if you could spend just a minute talking about your background.
Sure. Yeah. So I have 20 plus years at Microsoft and background in operating systems, security networks, et cetera. And so one of the things that Richard may have been alluding to is the ability to create these blocks in real time. And because there's flexibility in block size, it allows you to do all sorts of interesting things. For example, you could confirm identity without revealing identity because these interacting chains in these blocks are private. So for example, if you're talking about the popcorn at AMC, rather than someone having to look up, oh, okay, well, your name is on this list, you could just quickly scan your IronWeave chain on their kiosk and say, oh, yep, you're available for free popcorn without revealing who you are. That may sound trivial, but there are all sorts of reasons why privacy and security like that could be applied in a digital and online world to a lot of benefits, whether it's identity or certification or any sort of thing that just opens it up, not just to moviegoers, but to enterprises that are kind of sitting on the sidelines waiting for a private, secure environment where they can still engage with the rest of the world in a holistic online system.
That makes sense to me. Absolutely. We've seen, zero knowledge proofs be in conversation and other applications, but obviously if you kind of have it at the blockchain layer too, obviously it helps to build this. And curious, is this EVM compatible or, from a tech perspective, what does this blockchain look like?
So we have built it from the ground up. And so it's not specifically EVM compatible, though we could build that compatibility in later. It is, again, instead of one chain, you can have millions of chains, and every interaction doesn't have to get stuffed into a parallelized block system. It's tens of hundreds of thousands of transactions happening simultaneously. So the opportunity for all sorts of different applications without having to wait in line to use the chain has all sorts of, like I said, different applications.
Yeah, no, that's fantastic, and we're curious to see, obviously that evolution happen. But there is a reason why you're doing a capital raise, right? There's more to build, I'm sure. So for anyone watching, what's the best way? How can they find more information related to the raise if they wanted to participate? And also, how can they just follow along either way with IronWeave and Castle Placement on your respective endeavors?
Sure. If you just go to our website, castleplacement.com, and click on the IronWeave transaction, you'll be able to see comprehensive information about the company and the raise, including, of course, important risks, which you should consider.
Fantastic. And then IronWeave, I'm sure we can all visit your website as well, learn more, and follow you guys on socials.
For sure, ironweave.io, and follow us on X at at IronWeave and others.
All right. Well, fantastic. Thank you. And with that, we'll be transitioning on to the next section of the show. David, Richard, thank you for coming on today.
Kyle, amazing set of interviews this week. Amazing set of news in the market movements, but we've got more. In fact, a lot of product announcements, new RWAs in the space to cover. You ready for them?
Yeah, dude, lay it on me.
All righty. Well, first off is a crypto veteran, Fasanara Capital, entering the RWA space with their FAST product, which is actually a tokenized money market fund. It's in collaboration with Apex Group, Tokeny, Chainlink, Fireblocks, and XBTO. So that's pretty cool to see yet another product enter the space here, maybe faster than the others. We'll have to see. And then we also saw a big new digital bond on HSBC Orion by Chinese-owned BOCOM, Bank of Communications in Hong Kong, issuing 300 million digital bond, which, by the way, another state-owned Chinese conglomerate issued $190 million digital bond on HSBC Orion back in December. So there's a lot of activity.
About 500 million in debt issuances right there.
That's a lot. That's a lot of debt issuances that people just shouldn't overlook here that this is happening. And then we've got over in Australia, the Red Belly Network and Jelly C teaming up. Okay, so Jelly C aims to be the first tokenized fund issuer in Australia using the L1 out of Australia, which is Red Belly.
And that's Jelly, Jelly, and then just the letter C.
That's right, Jelly C. Both digital companies there. And then we've got in Italy, the Enel Group, not sure how you say them, but they are one of the largest electricity utility companies in Europe, and they are tokenizing solar panels, Kyle, so that they can sort of make that energy available tokenized. So you could say be in a high rise and offset your energy bill, investing in some kind of solar panel somewhere else, not on your high rise. And that's going to be on Algorand. So cool to see Algorand sort of back in the mix here. It's been a little while. And then Idle Protocol is doing an RWA vault in partnership with Maven 11 using their prime brokerage and private credit product. And this will be on Optimism. So we've been talking about vaults for quite some weeks now, Kyle, and I think we're going to keep talking about vaults every week because I think they are an incredible important innovation for RWA adoption. But those are all the RWAs we got this week, aside from some announcements. I'd love to get your thoughts on which one of these stood out to you.
All right, I love honestly all of these headlines. I thought they were all very cool for different ways. Obviously, the money markets thing is fascinating. I've talked about this before on the show, but as of last year, which I'm sure these figures are out of date now, I believe that the crypto industry as a whole owns like the 16th largest portion of U.S. treasuries of any countries in the world, and that's rising. They're only like, again, as of maybe September of last year, they were really only maybe 100 billion or so away from breaking into the top 10. And so we may be closer and closer to that now, especially with more and more products that are launching, which are just purchasing more and more treasuries. Not to mention, maybe things have changed in the political sector, but certainly last year, almost every country that was in above the crypto market in terms of owning treasuries was selling their treasuries. And so not only is crypto growing, but the rest of the pack was selling. And so I think that's only going to continue. It's fascinating to see how that will continue to drive geopolitical realities in this space. As we talked about, there will be a point, we may have already crossed it, where some of these things become too big to fail in terms of you own so much government debt within the crypto industry that you can't risk from a Federal Reserve perspective, having that flood the market. So that's a fascinating development.
And David Sachs also saying that they're going to focus on a stablecoin framework right after this latest executive order. One would think that that's going to help your prediction, I remember from earlier in this year, likely come to fruition in that growth, and also mine regarding the growth of stablecoins this year. They were going to see that double, maybe more. So I'm excited for that.
That's
Kyle.
right.
Any others stick out?
Well, I interrupted you as you were reading through the headlines. Cool to see $500 million just boom, immediately come on chain with these debt issuances. This is something that you and I have been talking about for so many years, that the tokenized real asset market cap is very easy to, it's easy to see how that can eclipse the crypto market cap, because you don't actually have to create a ton of value from zero. It's actually just bringing a lot of these assets on chain. And here's a great example of $500 million that spins out of nowhere, doesn't require pulling liquidity from somewhere else, which we see in a lot of the meme coin stuff. It seems like every new meme coin that pops up, a different meme coin has to dip in order for that liquidity to move over. It doesn't seem like a ton of new value is necessarily being created in that space. And then finally, Herwig, I'm actually a big fan of the Enel Group tokenization of solar panels. I think that I could have gone with the IDLE protocol launch, because all that stuff's really cool with private credit. But I've talked about that before. On the solar panel side, I think it's interesting because so many of these renewable energy sources, whether it's the renewable energy or even if it's like biofuels, they get credits and things like this. And especially in Europe, there's a huge problem with fraud in these industries. There's a lot of Southeast Asian and Eastern Asian companies that are essentially hijacking a lot of these stimulus programs and not exactly following all of the proper standards in how they actually redeem these credits. And it's putting a ton of large businesses out of business. I was reading about a few in Germany that are having deep issues with tracking the legitimacy and losing out on a lot of these credit businesses which power these companies. And so the idea of bringing a lot of this process on chain from a supply chain perspective to track and see exactly what's going on and see where these credits are going and how they're being used, I think is a tremendous opportunity for the renewable energy industry. And then not to mention just additional funding. I mean, we're all, I think, generally theoretically in favor of solar panels powering everything if it could work. So cool to see these types of things receiving more additional opportunities to get funding. And I guess it just makes sense. If you're going to be the most technically advanced energy source, you may as well track it on chain.
Almost sounded like an endorsement for Company of the Week, but we're not quite there yet, folks. So we got a couple more announcements. Totally agree with you, Kyle. I think it's a novel innovation and use case, and I'm excited to see, particularly because they're in partnership with such a large, energy company, to see how this rolls out and sets a potential model and standard for the future. But Kyle, also you might be interested that there is another Bitcoin chain out in the market now focused on RWAs, Hamilton, saying that they've raised $1.7 million for their protocol, which is focused, of course, on RWA. So we love to see that, and congrats to the team there. And then we also saw some interesting news out of Shintai, saying that they are officially expanding into the United States. I wonder if the current new political climate and such may have anything to do with that. But we know that they have already secured the licensing over in Singapore. They've already been doing a lot of big tokenization deals that they've announced. They've got their checks token. So they're moving on the scene, and now they are ready to enter the big league, the United States. I love to see it. That was probably inevitable, but nice to see their announcement on Twitter about that. So good stuff to see there, Kyle.
Yeah, I spent some time with their team in Bali in Asia this summer, and I found myself dying on the hill of my U.S. patriotism, and I'm happy to see that they've also come around to the idea that the Western market here in North America is a key opportunity to drive liquidity into a lot of the opportunities that they're bringing to market. So major shout out to that team.
Thank you, Trump. And there's no better way to end the token debrief on showing you that we are now, again, the United States, the crypto capital of the world. So let's make it happen. But Kyle, we've got an update from the RWA Foundation, and then one more final segment where we got to pick some companies of the week. So let's get into it.
I can't wait.
And through all the crazy madness and news that's happening in the crypto space right now, you maybe did not hear the latest news from the RWA Foundation, the community that's focused on crypto natives that love RWAs, that we launched at the end of last year. So let's dive right in to what we talked about last week, which is we released the roadmap. So finally, you can get an idea for what's to come. Of course, at the end of last year, as I mentioned, we did release our white paper already. We actually did that on Christmas Eve, which was fun. And we launched, of course, the official foundation website with our over 30 partners across the industry with our tokenization engines like Securitize and many others. We got Proppy and Maple, as well as many of the chains like Avalanche and Stellar and Polygon and Province, Polymesh, many other great partners that we have. And as we continue to grow our ecosystem, we're really focused on, of course, launching the token itself. So the WALLY DAO is designed to be the largest community of crypto natives focused on RWAs. We see a lot of potential in bringing together this community, including getting perks from all of our partners that we're talking about, potential airdrops of future governance tokens from these partners as well. But we are only planning to release these tokens based on your activity and history in the RWA space. So depending on, how much you may have invested or signed up via accounts in a variety of different RWA products and platforms in our partner network, you may get more WALLY than you even thought you bargained for. So this is an exciting airdrop. We're looking to bring together, of course, this community by only rewarding RWA members. And so as we roll out into the first half of the year, we'll plan to announce a lot of these special perks and benefits. But I think a lot of people are also excited about our very cool, innovative treasury model. I think it's actually pretty novel, and I think a lot of other DAOs are going to follow it, which is we call it the RWA powered DAO, which in the sense is that we are not relying on any kind of VC funding. We're not relying on any kind of outside token sales or doing sort of token sales as we go. No, in fact, we are creating a RWA treasury that we're going to swap the WALLY tokens into. And that will fund in perpetuity the operations of both the DAO and the RWA Foundation. It's going to be awesome, and it's going to be completely community managed. So more news and details about that, and hopefully we can start swapping as early as Q3. And we plan to end the year with our very first community gathering, bring all of the herd together, if you will, over in Miami, where we're located, right? So we can't wait for WallyCon, where we'll be releasing even more announcements, demoing, of course, amazing RWA technologies and updates, and, of course, having a great time as the WALLY DAO. So hopefully you all love this roadmap. Definitely tap into our Twitter, our X account for more news and updates, as well as on our Telegram account if you want to get active and start talking and meet some of the fellow trunkies. So with that, that's the RWA Foundation update kicking in for next week. But now we've got our companies of the week.
All right, everyone. Ooh. Don your tuxedo. Bring out your champagne flutes. It is the gala of the century. And by century, in this case, I mean the week. Herwig, this is by far and away the most fun segment in any tech podcast, I think, in the entire world. It's also maybe the most high quality, illustrious award in the entire tokenization industry. That is company of the week. This is where Herwig and I take two companies and we give them a special shout out for doing something incredible, for paving the way of the industry, or just leading the pack. And it's a ton of fun. So for Herwig, episode 269, how are we feeling?
Well, Kyle, this was a electric week of news. I mean, we've been seeing a lot of news in general, right, for some time now as the industry has come into full, health here. But this was a particularly historic week, I think. I'm going to have to actually give it out to our Company of the Year winner. So they're marking already their first entrant for 2025 to win it 2 years in a row. Let's see if they can be the first company to win it 2 years in a row. But BlackRock, they're my Company of the Week for a couple of reasons. Aside from Larry Fink, once again, being the best proponent in the world for tokenization and helping sort of, get regulators on board, other financial institutions on board, just people in general, whether they're fund managers or RIAs or retail investors, people listen to this guy. And so when he is endorsing tokenization the way that he does repeatedly, that's a big deal to me. It means a lot. I think it means a lot to you too, Kyle, but that's just like a huge shout out. But also got to give it to BUIDL, which continues to be an innovative and leading product in this space. I'm a huge fan of daily dividends. Daily dividends to me are the future of all yield products. And I think it's going to make a big difference when it comes to people looking to see how they can apply the BUIDL product in their applications and take advantage of this daily dividend system. And they also rolled out the intraday redemptions, right? So we're looking at just more of a full on-chain product that you can do just about anything with and receive, basically on a daily basis, your yield, which I always thought was like, why are we waiting for either the monthly coupon payment or quarterly or however their back end infrastructure works in collecting, ultimately that treasury yield or other similar cash equivalent yield that they might be getting, CDs and otherwise, who knows what they got set up, right? In each and any of these products. But in the case of BUIDL, they continue to pave the way, Kyle. So BlackRock, you're my Company of the Week. Congratulations. You're the Company of the Year last year, and you continue to pave the way. So keep it up.
Major congratulations to BlackRock. This is presumably the second largest feather in their cap, only second to the Company of the Year award that they recently won just a week or two ago. So you may have heard of BlackRock before, particularly from our Company of the Year win, and of course the trillions of dollars of assets under management that they have within their company. But that's neither here nor there. Makes a ton of sense to me, Herwig. I think adding the utility into their products is just so exciting. We certainly covered that earlier in the show. It's a great win.
Kyle, we've got one more to give out. That specifically comes from you, so give it to us.
Herwig, look, we've worked together now for so many years, and there's a phrase that I've said over and over and over again on calls or in meetings or whatever, and that's the phrase, I'll believe it when I see it. And that really is tied to the idea that, there's a lot of press, there's a lot of headlines, everybody can talk a really big game, but it's only until that wire hits that you really know for sure that a deal actually went through. And so many great announcements we had this week, so many things that I can get really excited about from a thematic or ideological perspective, but until it actually happens, I don't want to count my chickens. And so because of that, I always like to award my company, or I try to award my company to companies that are actually getting things done. And in that case, I do want to award a smaller company that's newer to the market, but they got their deal done. And that is Hamilton. Hamilton is a layer 2 blockchain that's doing tokenization of real world assets. They're based in the US and they're building it on a layer 2 on the Bitcoin blockchain. So I'm not exactly sure technically if this is totally feasible or not. I'm certainly not the technical development expert to figure that one out, but it makes a ton of sense because Bitcoin's the largest blockchain. It's trusted by everyone. Clearly, Bitcoin itself is the largest cryptocurrency and one that everyone's thinking about from a strategic reserve perspective. So for all of those reasons, building on blockchain certainly seems compelling to me. They were able to raise funding to get their business off the ground, focused on real world asset tokenization. And as we've talked about, Herwig, bringing new players into the industry, I think is a tremendous thing because the reality is a lot of the old players that have been in the space as long as we have sometimes can be a bit jaded. They can be a little exhausted of just having to beat the drum over and over and over through so many bull and bear market cycles. So you need to bring that fresh energy, that fresh excitement, and a fresh perspective on how we can drive real world asset tokenization and liquidity in the marketplace. And so for those reasons, I wanted to give a shout out to Hamilton with my Company of the Week win.
It's a great choice. It's a great choice. Raising money ain't easy, first of all. So
No, it's not.
I'm sure will go a long way, and starting to prove a trend here. I mean, you got Liquid, you got the Enduro blockchain for Marathon, right? So L2s specifically focused on RWAs for Bitcoin, maybe a thing here. And let's see what Hamilton's got. I'm excited. Welcome to the space. Congratulations to Hamilton. And to BlackRock, you're our companies of the week. So that's our show, Kyle. We did it. Another amazing week. We got a heck of a year to be covering this coming 2025. So I cannot wait. Of course, stay tuned while you wait for the next episode by tapping into stm.co or head over to our YouTube channel for more videos. We've got tons of cool charts, news, and everything else you need trading data-wise on RWAs. So go check that out. And of course, we heard Nico earlier, you better be tapping into our Telegram if you're a crypto native and you care about RWA. So join the RWA Foundation. Follow us on X there as well. Kyle, any closing thoughts?
Hey, happy to be here. Join the Real World Asset Foundation. Check out our book, Blockchain Explained, on Amazon. And shoot us questions, comments, anything you've got going on. We'd love to support and give any feedback. And how can we make the show better? That's the most important part.
Well, in that case, everybody, have a fantastic weekend. And of course, happy tokenizing.